Hello, in this presentation we will talk about what will be covered in the adjusting entries, financial statements, closing entries, and reversing entries section of the accounting and Excel course. And of course, we will be covering those adjusting entries made as of the end of the month to prepare for the creation of the financial statements, which we will then create. Once that end product has been created, we will have the closing entries and then reversing entries. We will start off with adjusting entries related to the loan payable. We'll then have a second adjusting entry related to the loans payable, a bit different format for these adjusting entries, breaking out in essence short-term and long-term portions. Then we'll have the accrued interest adjusting entries. These, remember, adjusting entries are those that need to be made as of the end of the time period in order for the financial statements to be on an accrual basis for the creation of the financial statements. Then we're going to have the invoice adjusting entry. We're going to have an adjusting entry related to an invoice created after the month end for which the work was done prior to that, and therefore we're going to have to record that invoice as an adjusting entry before the close of the month. We're going to have a prepaid insurance adjusting entries. We're going to have to adjust that prepaid insurance account, the asset account, as well as the related insurance expense account. We're going to have our depreciation adjusting entry that we will make as of the end of the time period and discuss its components. We'll have the unearned revenue adjusting entry, a bit different here than the adjusting entry we typically see for unearned revenue in a normal accounting textbook, and we'll discuss why it will be a bit different and the functionality for that and the practicality of it in a real life situation of recording the books. Then we're going to have the financial statements for February that will now be created after the adjusting entries have been done. We can then take the adjusted trial balance and create the financial statements for the second month of operations, February, including the balance sheet and income statement. Then we'll have the closing process. Remember that the balance sheet and income statement, the financial statements, are really the goal of the financial accounting process, to create those financial statements for the use for external users and possibly internal users as well, but that's the end goal. Then we have kind of the cleanup process, setting up for the next month, which is going to be the closing process for February, setting up what will be done in March, as well as reversing entries, which also are there to set up for March. And we'll go over what those reversing entries are and then discuss some common reversing entries, including accrued interest, reversing entries. These will be made as of the first day of March. So technically we could say they're in March, but they're really kind of part of the cleanup process of the close of the month of February. And so we'll have a reversing entry for the accounts receivable account. We'll have a reversing entry for unearned revenue.